Hi, welcome back, and let's learn about the third important term, that is depreciation provision, and this one right here is reserves. Okay, now what is a reserve? Reserve is a part of profit that is set aside and retained to provide for certain future needs like growth and expansion to meet future contingencies, okay, such as workman compensation. So like there is a profit in this year 100. Hence, instead of using that profit to again purchase some goods and to again pay for those expenses, purchase and expenses, we will instead put it into a box. That box is called reserves, and this box will only be opened when we'll have such contingencies like workman compensation, or yeah, we'll study more. What are the possible reasons in which we'll open this box? So these are basically retained earnings that are transferred to reserves. Also, once we create a reserve, that reserve cannot be used to transfer profits among the owners of the business. That is, dividend cannot be declared from that reserve. And yeah, basically it is kept with the business. And what are the possible reasons that it can be used for? Suppose you have general, okay, yeah, like this. What are the different types of examples of reserves? General reserve, that is general in nature. Workman compensation fund. Suppose in future there might be a labor strike and you have to pay them compensation for their demands. Hence most of the companies they create this reserve. Investment fluctuation fund, that is to cope up with the loss of speculation that every company does. Large companies do large speculations. Okay. Capital reserve, will study separately about it. Dividend equalization reserve, reserve for redemption of debenture. Okay. And debentures are the liabilities of company. When repaying the when repaying the debentures, we can use this debenture redemption reserve. Let's move on ahead and see what else can it be used for. Okay, so right here is the difference between a revenue reserve and a capital reserve. As revenue suggests operating, hence it is the reserve that is created by operating profits. Okay, now the differences that we are studying is mostly okay. So capital reserve can be created by revenue profits, that is operating profits, but in normal cases it is not created by it. I'll give you an example how a capital reserve is created. Like you have a share of rupees 10 and you have decided to sell it in the market of rupees 100. So the excess amount, that is the profit on a share, or that is the goodwill of a company that you are asking for every share, which is known as security premium. Okay, it is known as security premium. So that security premium will be treated as capital reserve. Okay, now you can see security premium. And yeah, what else? It is created to strengthen the financial position. Okay, it is generally a compliance of the government, that is legal requirement to create a capital reserve, like debenture redemption reserve. And specific revenue reserves are, yeah, they are for general purpose, they can be used for anything. These are the general reserves mostly, and but these reserves are only for the purpose specified by the law. Hence you cannot use the amount of security premium transferred to the reserve other than there are like 8 cases in which the amount can be utilized, like for example to write off capital losses or issue of bonus shares. Also capital reserve can also be created from capital profits, that is if you sell a machinery in profit, that is in place of 10 you sell it for 12. Hence 2 is not the operating profit because it is not from our trading activity. Okay, so it is a capital profit. Well, that example has lot of loopholes, but yeah, it will do your work. What are the importance of reserves? Meeting a future contingency, strengthen the position of a company, redeeming a long-term debenture. Okay, accepted. Now every company has a reserve. Okay, what's a secret reserve? Before moving on to secret reserve, let me show you a balance sheet in which you can see reserves and surplus. Hence, let's open a balance sheet of Facebook Incorporation, that is right here with me. As you can see right here, it has retained earnings, okay, of 41,981 million dollars, I guess. What's the unit? Yeah, $1 million. Okay, so Facebook has created this reserve just in case it needs. Every company has to create a reserve. Well, for Facebook there must be lots of laws applicable, hence it is compulsory for it. But for other companies, yeah, they create them optionally because they don't want to take out their profits, or they don't want to utilize that profits in their operating expenses, and they are just preparing for future contingencies. Let's check out one more balance sheet, that is of Amazon Incorporation. And yeah, right here you can see retained earnings. These are the reserves. This is 8,636 as compared to Facebook. Facebook has Facebook has 41,981 as per 8636. So it is like how many times? 5 times. Facebook has 5 times more reserves than Amazon. Coming back here to Amazon, let's try to search for the word reserves and see what Amazon has. Okay, tax contingencies. We have recorded reserve for tax contingencies inclusive of accrued interest penalties for US government and foreign income taxes. Okay, so they have created reserve for penalties of tax. Okay, interesting. Let's search more. Reserves, enter, enter. Nope. Accrued liabilities, yeah, right here. Deferred income tax liabilities and millions. So these are the accrued liabilities that have not arrived yet but may arrive in the future, hence there is a reserve created for it. Okay, and we are subject to income tax in the US and numerous foreign jurisdictions. We establish reserves for tax related uncertainties based on estimates. Okay, so as you can see that Amazon is pretty serious about their tax estimates, and it knows that it might increase in future and there might be a contingency to pay for. Hence, to meet its future contingencies, Amazon is creating reserves. Okay, now what is secret reserve? Secret reserve, as the name suggests, is not shown in the balance sheet. Okay, interesting. It may also help reduce, okay, reduce the disclosed profits, also the tax liability, and then it can be merged with when lean. Okay, so suppose every year the profit is this, and 1 year, this is a graph. Okay, and 1 year the profit is this. Hence we will introduce our secret reserve to maintain the correct graph of profit and to make the investors interested. Okay, it is termed as secret. Management may resort to creation of secret reserve by charging higher depreciation than required. It is termed as secret reserve. It is not known to outside stakeholders. Okay, what are the ways how to create it? Undervaluation of inventory stock, charging capital expenditure to P&L, making excessive provision for doubtful debts, showing contingent liabilities as actual liabilities. Okay, you know what contingent is? You know what actual is? Okay, Mm, creation of secret reserve within reasonable limits justifiable on the grounds of expediency, prudence, and preventing competition from other firms. Okay. So if Amazon does not want Google to compete it with, and it will reduce its profits and create secret reserves. However, there are lots of laws which prevents and directs the secret reserves. So there need to be a proper clear understanding before we do it. Now let's check out what if Facebook wants to create a secret reserve and how it can do it from contingent liability to actual liability. We have already studied the contingent liability of Amazon, and it was related to some of the deliveries in Syria state. Okay, let's see where is contingency in the balance sheet of Facebook. Okay, commitments and contingencies. Yeah, right here. So this case is against the directors of Facebook, that is Mark Zuckerberg. Okay, and this is a famous case, that is, it is a case of user data practices as well as the misuse of certain data by developer that shares such data with third parties in violation with our terms and policies, seeking unspecified damage and injunctive relief. Okay, so you might have known about the famous congressional hearing of Mark Zuckerberg about the privacy. And if you even haven't heard about it, then you can check your mail in the year 2018. It was the year of every company used to send you an email that we have changed our user policies. This was because of that hearing right here. And yeah, so Facebook is in doubt that it might lose this class action in the court and it has to pay unspecified damage and injunctive relief. But I wonder who will they pay, because it's us users that data was at stake. So yeah, what if Facebook shows these this contingent liability as actual liability? It can create a secret reserve. Okay, but we don't know what Facebook is doing. Although if you study this report extensively, you can know a lot. Like just overview reading and skim reading has given us a lot of knowledge. Cyber attack that exploited a vulnerability in Facebook's code to steal user access token. Okay, another attack in September. Indemnifications in normal course of business. So yeah, you can go ahead and give it a extensive read if you want, but this is how this is how depreciation, reserves, and provisions are used to manipulate the profit. Okay, right here I'll write it for you. So depreciation, provision, and reserves are used to inflate and deflate any company's profit, and they are also the prime reasons that company. Yeah, wait a second. And reserves. Okay, most of the laws of the government are applied to these three only because there are a lot of loopholes in these three and they can be easily exploited to save your tax. Okay, for tax saving, save tax, and they can be easily exploited to increase or decrease profit. We have learned the ways how to do it. We have learned for depreciation, that is capital to revenue, revenue to capital, current to fixed, fixed to current, and changing useful life and using the term estimate. Okay, also if you decide to have a residual value, if someone not decides to have residual value, the provision right here, you can create a provision even if you are not sure. Yeah, just to deflate your profits. And if you have to create a provision, you can choose not to inflate your profits. For reserves, you can create secret reserves or you can utilize reserves in unethical ways that are not defined by the law, but there are lots of laws that govern this. And just before you think that there is a loophole, that loophole is already exploited and is filled by the government. So there might be another loophole. Okay, lots of laws. I'll show you one more example of depreciation, just a second. Now coming back to this sheet of depreciation. Okay, right here you can see this is the manipulation sheet of depreciation. So right here you can see, let us assume two companies buy the same asset for 1000. Company A assigned the residual value 200 and company B residual value 300. Okay, now this scrap value, that is the amount that it will be sold after a certain period of time, that is the left out value of a asset, and it is totally dependent on estimate and management policies which can easily be manipulated. So for 200 and 300 their depreciation will be different, that is 1000 minus 300 divided by 5, useful life is 5 years, and this will be 1000 minus 200 divided by 5. Hence every year depreciation for company A will be 160, while every year depreciation for company B will be how much? 140. Hence company B has deflated profits by rupees 20, or company A has inflated profits by rupees 20, but we can never know for sure what's the truth. That is why there are lots of laws to guide these three. But yes, whenever there is a law, there is a loophole. So yeah, good day.
The whole world looked to you. Would you step up and inspire?